Alright, so hi everyone. Something really significant happened in the markets yesterday. And there's no better way to say it than this.
I want to break free!
That's right, the S&P 500 has finally broken free of this mother of all trend lines that everyone has been watching since the beginning of this bear market. And we've talked about this trend line many times since the start of the bear market in 2022. You can see that was the first. There was a high, and then we had this other high, this other high, this other high, and it looked like the market just couldn't break this darn trend line. And everyone was saying that once it hits that trend line, it's going to go back down again. But yesterday, at last, we have broken that trend line. We've got a very clear breakout, and yesterday closed as a pretty decisive bullish candle. Now, those of you who study technical analysis will know that once a price is able to break a very strong psychological trend line in the markets, it will tend to attract lots of new buyers into the market who have the fear of missing out. They tend to rush in, and there's a high probability that the price is going to have very strong bullish momentum. Now again, there are no guarantees in the market. As you guys know, anything can happen in the markets because news can come out the next day that we can't predict, and of course you can always collapse back down again. There's no 100%, right? But again, based on probability, there's a really high chance that we could be going a lot higher right now, especially after the fact that I said that we're in a new bull market confirmed by the 50 moving average crossing above the 150 moving average. Like I said, that's a 90% probability that the bull market has started based on years and years of historical patterns. Now, what makes me more bullish is the fact that the majority of banks and the majority of fund managers are still very bearish. As you guys know, I've taught you before that the market tends to go the opposite of what everyone expects. When everyone expects the market to go down, the basket goes up. When everyone thinks the market is going to go up, the basket goes down. The market tends to go in a direction that hurts the most people. And if you take a look at most of the banks, JP Morgan, Morgan Stanley, Citigroup, the majority of them, their forecast was that this year, the first half of the year will be very bearish. That is going to crash the first half and rebound in the second half. Like, look at what Citigroup said, right? A weaker start to the year is anticipated with a 5 to 8% drawdown from our 2022 year-end target expected, right? Blah, 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 right? And again, the majority of fund managers who are managing billions of dollars, they are very bearish. How do you know? Well, take a look at this fund manager survey of fund managers to find out how much cash they're holding. You see, when fund managers are bullish, they've got very little cash because everything is deployed into the market. They have bought stocks. But when fund managers are very bearish, very scared, they tend to have a lot of cash because they sell their stock and they hold a lot of cash. So anytime fund managers, their cash level is above 5%, that means they're holding a lot of cash. That means they're bearish. And if you take a look at this chart, you can see this is the 5% level over here. Fund managers were at the peak of bearishness in October of last year. You can see in October of last year, the amount of cash they held was the highest since 2001. That's, over 20 years. Is the highest level of cash in 20 years. And interestingly, this actually marked the bottom of the bear market. Right? So the market tends to bottom when people are the most pessimistic, when people are the most scared. That's when the market bottoms. And as you guys know, that's actually the best time to buy when people are scared shitless, because you can be greedy when everyone is fearful. Now, since October to now, you can see the cash levels have declined slightly, right? It's gone down slightly, which means fund managers have started to buy stocks a bit, but not too much. But their cash levels are still above 5%. So what does it tell you? It tells you that there's still a lot of cash on the sidelines. Now, imagine you're a fund manager, you're holding a lot of cash, right? And you start to see that the market's going up, right? Everyone says the market's going down, but the basket is going up. It broke above the trend line and looks like a new bull market. What's going to happen? You're going to panic. Because if you don't get in fast and the market runs off without you, you're going to underperform the market and they're going to get fired from their jobs. So this creates a lot of FOMO, a lot of fear of missing out among the institutional fund managers. So right now you can bet a lot of fund managers are beginning to say, oh shit, we better get in, right? Start buying stocks. And so it becomes kind of like a self-fulfilling prophecy. When you see that breakout, right, everyone rushes in to buy, and that pushes the market a lot higher. And of course, a lot of people are short the market. Many people are very, very short the market. So when they're short and the market goes up, what happens, right? They lose a lot of money and now they're panicking, oh shit, I'm short, the market's going up, I'm losing a lot of money. So they're forced to buy back their shares to cover their shorts. And by creating a lot of buying effect, that creates a short squeeze that pushes the markets even higher. Now, a lot of you will realize that if you read a lot of social media, whether it's Twitter or Facebook or Instagram, you watch a lot of YouTube videos on all these financial experts, what would most of them say? Most of them would say, it's gonna collapse. It's a sucker's rally. It's a bear market rally. Why? Because it always happens in the start of a new bull market, right? Now remember that a new bull market is never born on optimism. A new bull market is always born on pessimism. At the early stages of a new bull market, the majority of people are in what we call disbelief, right? Disbelief. And most people are saying that this is a sucker's rally. In fact, when I hear a lot of people very negative, that makes me even more bullish. If I hear people all bullish and all the banks are saying buy, then I get worried. Because like I said, the market goes opposite of what most people think. If most people are still negative, that makes the market go up even higher. That's just the way the market works. That's why there's a very interesting saying that says a bull climbs a wall of worry, right? So if you take a look at, for example, the last bear market, after the last bear market, which was in 2020, it crashed, and that was the bottom, right? And that's the point that you wanted to buy the most at the early stages of the bull market, which you guys know I did. I shared in my videos. Those of you subscribe to my Ultimate Investors Playbook, you get my live buy and sell alerts every single day. If you're not subscribed, you can subscribe at insight.piranhaprofits.com. I've been buying at the beginning of bull markets, right? But again, if you read the financial news, if you listen to social media, everyone is telling you that it's not safe, because bull markets are always born of pessimism, right? Look at that, right at the bottom. The best time to buy is when the Wall Street Journal tells you that the worst of the sell-off isn't here yet. Banks and investors are warned, right? Over here, when I was buying a lot during the start of the bull market, right? Economists fear drawn out slump as losses deepen, right? Equity market rally runs out of steam. Stock market investors are too optimistic. Stocks may have hit a ceiling. Stock surge is a bear market rally that would collapse. All the reasons the stock market gains are not to be trusted. Some investors are making the biggest bet against the market in 9 years, right? As the market goes up, more and more people are in disbelief. More and more people are bearish as the market goes up. And you find that once the majority get bullish, right? Like over here, 7th of February, the stock market is bouncing back for the right reasons, okay? So if you're waiting for confirmation to buy from other people, by that time, stocks will no longer be cheap. Stocks will be expensive again. And again, you're getting in at a premium, right? Because you always pay a premium for safety, okay? And that to me doesn't make sense as an investor. So by the time the headlines and the social media tell you that it's time to buy, the stock market would already be up 70 to 100% by that time. It's the same thing in China. If you guys remember back last year in October, what did all the media say? They say that China is uninvestable, right? Now, when those bastards said that, I bought even more Alibaba, I bought more Tencent, I bought more China stocks when they said it's uninvestable. Now, since then, China stocks are up 50, 60% since October. And now, after it's up 50, 60%, now they tell you, hey, it's time to buy China. When it's already up 60%. Now, no doubt, China, I think, can still go up a lot more. But the fact is, you should get in earlier when people say don't buy. So, for most people, it's really difficult to be a good investor because most people are wired to follow the crowd because most people are creatures of conformity. But to really beat the market, to really outperform the market, you must train yourself to go opposite of everyone else. And I know it's not easy. It is not easy. That's why many people who have got high intellect, who are highly educated, who have got finance degrees, they can't do well in the markets because they lack the emotional temperament or tenacity to go against the crowd. It's something that you can learn, something you can train. And that's why, for many of people in my community, they tell me, Adam, one of your greatest value that you give to us is not just the facts, not just the financial valuation or the numbers, but it's really training our psychology. And that's what I do for our community. So do join our community, right? Now, some people, I've heard them say, but Adam, how can this be the end of the bear market? How can it be? Because a lot of people say that for the bear market to end, we need to have capitulation. We need to have panic selling. People say, there's no panic selling. People are not panicking yet. Yes, they are. All right. Now, take a look at this chart you can see. In this chart, by the way, this chart is by Goldman Sachs, right? And this shows you the percentage of market cap owned by retail investors. And this chart shows you something really interesting. Last year, from October to December, especially in December, retail investors in aggregate have sold all their S&P stocks they accumulated for the last 3 years. So all the stocks they bought from 2019 to 2021, they panicked and sold everything by December of last year. Sorry, not everything. Not only did they sell everything, but they sold 1.5 times that amount. In other words, they sold everything and they shorted the market. Okay? So you can see, for example, end of last year, S&P 500 stocks, they went negative in terms of people selling, panicking, right? How about NASDAQ? NASDAQ, same thing. Sorry, this is NASDAQ. That's the S&P 500. So in other words, investors, retail investors, pulled out more than 27 billion from equity mutual funds and ETFs in December last year. It was the 10th largest one-week outflow in 21 years and the largest December outflow in history of the markets. So the sad thing is, after being in the markets for 30 years myself, I found that most retail investors, they don't learn their lesson. They tend to sell everything, they tend to panic at the bottom of the markets. And once they sell everything, they panic, that's when the market begins a bull run. It's really, really sad, but that's life. So I always say that the market is like a bus that's going uphill. As it goes uphill, more and more people climb on the bus. But when there are too many people on the bus, it can't go up anymore. So for the bus to go up, it has to throw people off the bus, by swerving. So the bus driver swerves, and once the majority of people are thrown off the bus is light again, and that's how the bus can climb that hill. So instead of being like everyone else and panicking and listening to all the prophets of doom out there last year and selling everything, I told my community and I showed them through my own portfolio that I'm buying. I'm buying at the peak of pessimism. And by continuing to buy great companies when they're really undervalued, when people are panicking, you get huge gains once the sentiment shifts. Right? So for example, in my portfolio, this is one of my portfolio, you can see that for the year 2023, it's just the first 3 weeks of the year, and I'm up about Yep, so year to date, you can see I'm up about 15.69%, up about $355,000 on this account. And on my other account, which is over here, year to date, you can see I'm up about 16%, up $332,000. So my two accounts, I'm up over $600,000 just in the first 2.5 weeks. So imagine if I had panicked and sold like everyone else last year, I would have missed this 15 to 16% gain in the first 2.5 weeks of this year. Now, granted, my portfolio is still way below the peak that was set in November of 2022, right? So since then, it's gone through this drawdown. My portfolio is the one in blue, but it's still up 95% since 2019, right? And of course, this is just the beginning of the bull run. Once the bull run gets underway and the markets start to trend higher, it'll be up about 200% or more in the next couple of months, or at least the next year at the latest, right? And you can see my portfolio outperforming the S&P 500 in green, over time. So I know some of you will be having a lot of questions like, so Adam, what's the rest of the year going to look like? So the market's gone up quite a bit in the first month. How about the rest of the year? Aren't you concerned that corporate earnings are going to be very disappointing? Corporate earnings are going to collapse, going to be negative this year, which I agree they will, right? Are you afraid of the, recession that everyone's talking about? And if this bull market continues, which are the sectors and which are the stocks that offer the best value, that have the most upside potential? And of course, a lot of you have got questions on China. China, as you know, is in a bull market as well. In fact, the China bull market started before the US bull market, and I called that a couple of months ago as well. So is it safe to ride the China bull for the rest of the year? And how much returns can I look for in China and in the US? So I'll be sharing all my insights for the rest of the year in my upcoming live webinar happening this weekend. It's called Outlook 2023. So it will be happening on the 28th of January, 7 p.m. Pacific time. Now, if you're in Asian Singapore time, then it'll be 29th of January, Sunday at 11 a.m. So it depends on your time zone, whether it's 28th or 29th January. So all you got to do is, if you go to the description box of this video or the previous video, and you just click show more, it'll give you all the details of my live webinar. And it's absolutely free for you to register a place for the live webinar. It's going to be about 3 hours. Again, you can see that Pacific time, 7 p.m. 28 January. I'll be covering all these things in the exclusive online webinar. You can read all about what I'm going to cover. Plus, we're giving up some really cool bonuses for you guys who are attending. Now, to reserve your spot, you just have to click on this link over here. Now, depending on where you are in the world, it would actually show you your time zone. So for example, I'm in Singapore time zone and it shows me, okay, 29 January, Sunday, 11 a.m. So click to reserve your spot right now, and I look forward to seeing you at the Outlook live webinar event. I'll see you guys then.